Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway from VerifiedInvesting.com and InTheMoneyStocks.com. We have a lot to discuss today. We just got ADP private sector numbers out. Again, the data was weaker than expected. We're going to get right into the charts, guys. Let's make our way over here. All right, so first things first, this is yesterday's action on the 10-minute chart. Believe it or not, this is just yesterday's action right here. This is a zoomed out view of the S&P since basically the 14th of October. So think about that. We're now 3 to 4 weeks in. The markets have been kept in this incredibly tight range. Which way are we going to break? Are we going to break up here and head back to the highs, or are we going to break below and start selling? Now, the kicker on this one, folks, and this is why I'm harping on this to start this broadcast, is because this is the determining factor if the markets continue to float into year end, or if we break below, we may have this bigger corrective move down to 440 on the SPY, which currently would be about a 17-point drop or 170 points on the S&P 500. All right, now again, as I said, we just got the data on the ADP profit numbers, or I should say jobs numbers. Let's take a look at what we're seeing here. All right, so first things first, notice this, and I'm zooming in a little bit. So it looks like we were trending up a little bit. ADP came out. We were right here, and you got a little bit of a hop up. Not much. Markets, again, did not really rally a whole lot. Now, let's dissect the jobs number. ADP number one is private sector, so it's not as big of an economic number as what we see with the non-farm payrolls on Friday. So this would be a secondary tier economic signal. Now, the number was expected to be 130,000 jobs created in the private sector. All right, so again, expectations were 130K. The number came in at 103K. All right, so again, you might say, wow, so less jobs created. Would that be a negative for the markets? The answer is no, not really, because the market likes bad news. Very counterintuitive for those of us that live in the real world out there with jobs and job losses. But when there's less jobs created, what does it mean? It means the Fed can potentially or will potentially come to the rescue of the market, which is everything the market is hoping for. Right? I mean, this is a market that is literally a drug-addicted market. All it wants is drugs again from the Federal Reserve, aka cheap money, low interest rates, more money printing, quantitative easing, government spending, you name it, all of this crap, right? And I have all these little balls now, and I love it because I can just like freaking throw it right at the camera when I get annoyed at things. But again, the point being is that this is the way the market works right now. To many of us, it's lunacy because eventually this number is going to go to the point where people are losing jobs and the markets will probably still like it. Now, there will be a turning point. I mean, if we ever get to a point where we're losing like 300,000 jobs a month, yes, obviously at that point, the markets will freak out and say, oh my God, the Fed doesn't know what they're doing. They're behind the curve. They can't print us out of this, whatever it may be. But right now, weaker numbers are a positive. There's no doubt about it. So again, looking at the real-time data here, going back to the real-time data, we are looking at a slightly higher open on the S&P as of now. We'll see again where it is. But again, last thing I'll just bring to your attention, let's get rid of all this pre-market and after-hours data and go back to our overall trend line, right? And again, it looks like I messed that up a little bit there. But basically, we have to adjust this back down. And what we want to do here is bring these lines back into focus right there. Okay, and again, bear with me as I bring that up. This line has to be adjusted up to here. There we go. That gives us that parallel that I was talking about. Must have been when I went to the other data that it got screwed up on. But again, if we zoom in on this here, we know what we're looking for, right? Again, as long as the markets stay above currently about 455 on the SPY, 455, and I apologize for my poor handwriting. As long as we stay above this level, plus, bulls in control, okay? Bull market, right? Market. All right, so as long as that stays, it's a bull market, and you should look at it that way in the near term. If we break that level, that's where the bears will take control and potentially drive us lower. All right, having said that, what do I want to do next? I want to flip over to the 10-year yield. The 10-year yield, take a look at this. Go to your 10-minute chart. Look at what happened on the private sector numbers. The 10-year yield began to roll over again. Now, again, why? Because weaker numbers, all right, think about this. It's a very simple, but again, I understand why it's hard for some people to understand. But basically, if you get weaker numbers, then it ultimately implies the Fed may have to cut rates, which then will drive the 10-year yield lower. So weaker economic data generally means lower rates. That's what we're seeing here again today, at least in the near term. If we flip back to the daily chart, I've given you guys my target on the 10-year yield. Where is the 10-year yield going to go? Basically, we're just continuing to look at this area here. We're actually getting pretty darn close on the daily chart. I mean, incredible move. Now, I will say this, guys. The market is starting to get, literally what you're seeing happening here, this was like higher for longer, and maybe the Fed would have to continue to raise rates. This is like the Fed's going to be cutting rates. Everything's going to be back to the party days of free money. We're going back to like just everyone having a plethora of cash. It's honestly way offside. It's getting to that point. So I want you guys to be aware of that, is that the market tends to get one way and then the other way. And again, chances are, where should we be? We ultimately will find our equilibrium. Think about this, right? Here's a ball. Imagine it's attached to a string, all right? And it swings back and forth like a pendulum, or it is a pendulum. All right, here's greed, and then it comes back to fear. Where is the equilibrium? Where is it should be? Right in the middle. So when you get these big moves, this is fear, as in, oh my gosh, interest rates are going to go higher forever. This is horrible. Now you're getting towards, oh, the Fed is going to just print money ad nauseum and do printing and low interest rates, and interest rates will go back to or COVID levels. And honestly, that's probably not a good narrative either. So neither of these are realistic. Higher for longer, I do think it is higher for longer. My guess is, before you know it, we're back to about 4.5%. All right. Anyways, let's do another one like that. Just for fun. I'm having good times here. Okay, let's go on to the next chart, guys. The next chart is the dollar. The dollar has been rallying higher. Now, interesting to see the dollar going up as yields go down. But as I've said, the dollar is running into resistance right here. This was a former support level. It broke. This is, again, what we call, and if you followed my game plans, you know it's a scene of the crime retrace, right? So scene of the crime retrace, and then my guess is you start heading lower again on the U.S. dollar. All right, let's get into some other charts here, guys. I do want to go into some other ones out there. So a couple charts that I do think are worth taking a look at. Apple is worth noting today. Number one, what we can see here on the chart is that it pushed above this resistance line. So notice how we were basically into this gap fill, right? We hit it here, and we started to consolidate or pull back. Now, what happened yesterday is it surged up, it regained the $3 trillion market cap, and now it's above here. So where does that put us in terms of resistance? Well, where's your next resistance on Apple? Very, very simple here, guys. Take that highest pivot point right up here, draw your line across, and you're basically looking at 197 and change, 197.50. Right up here, that is your next resistance on Apple. Now, one thing to note, and I've learned this many times over in my career, is when you get close to an even number, oftentimes you'll want to touch it. There's some sort of psychological underpinning within each of us that it's hard for us to see something at like 197, 198. There's just this inherent need for it to touch 200. It's like, come on, it's got to touch it, right? Ultimately, I would not be surprised if at least it wicks up into that level before starting to pull back. Again, for me, Apple is one of the most amazing companies, not necessarily because of their products. I mean, they're amazing in that way as well, but because it's one of the few companies where you can see declining revenue, declining basically usage and all these other things. And again, you know, it's not that iPhones aren't used by a lot of people, but again, declining revenue speaks for itself. And yet the stock price now is borderline the all-time high and potentially will go touch a new all-time high. All right, so again, just remarkable how individual stocks can be looked at so favorably that investors in certain types of markets will ignore the reality of the fundamentals for a certain amount of time. Eventually it will matter. I always say fundamentals eventually matter, but emotion drives the market. Shorts and longs, motion. All right, a couple other things here, guys. I'm going to flip to the other screen. We got a lot to talk about on crypto, so let's get right into that here. So crypto, guys, Bitcoin continues to, as they call it, moon, right? And again, it has, trading at 44,000. Incredible move. Now, again, looking at this consolidation, I still remember a week ago or so talking to you guys about this bullish consolidation wedge pattern, as I called it, where we continued to kind of chop in here. And I said, listen, if you looked at 100 of this pattern formation, basically 70% would break to the upside. Well, that's obviously what ended up happening here. Now, the question is, my max upside target is about 48,000, and I've explained to you guys why 48,000 is significant to me. So number 1 and 2, you have trend lines, right? So what we can see here, and I'm trying to be able to show all these trend lines here, but basically what we have is we have a pivot high from 2019. It cuts right through the bull market lows right here, and that line extends to basically 48 to 50,000. We then have this pivot high, which after the big drop, this was the highest pivot before the next leg down. That's also at 48 to 50,000. And then lastly, the Fibonacci 618 happens to be right there as well. Same thing with the 50,000 level. Please understand, if we go to 48, 48.5, we're so close to 50,000, understand that you could easily wick up there. Now, is it likely we're going to go straight there? I mean, to be honest, I was only under my case for us reaching 48 was with the approval of the spot ETF. We haven't had the approval yet, but at the same time, markets are pricing it in at a 90% chance by January 10th. So I think the markets are assuming it's approved, and that's why you're seeing this continued upside. And my guess is when it's approved, you will see a move up to 48 or so, but then it will probably come back in significantly. And again, I still have it priced in, and I'm going to position myself and continue to position myself for a pullback to about 30 to 32 once we see all of this movement on the spot ETF get done. Now, I do want to cover a couple other crypto charts. Let's take a look here real quick at the Ethereum chart. I know some of you guys always wish I'd cover Ethereum. Ethereum is struggling at a short-term resistance level right here. Again, if we take a look at this pivot high connected to this pivot high, we're just kind of right up there. We pierced it here, right? And I apologize if it's hard to see, but then we're pulling back again. So this 2,300 level was my first target on Ethereum. If it gets through here, you have another epic, and this is kind of my max move. So, I try to give you guys my best case. And again, remember, this is all probability based, so it doesn't mean I'm going to be right. We know that. I'm not always right. But I look at the probabilities, the charts, the technicals, the data. And the probabilities tell me that Bitcoin, again, 48 to 50,000, that's a major top. And I actually think we come back to at least 30 to 32 once we hit that. With Ethereum, 2,500 is that level on Ethereum, where if we get to 2,500, probabilities heavily favor a near-term top and a big corrective move. All right, so again, just a couple things like that. The other thing I just want to mention is if you look at some of these other altcoins, the altcoins have really stalled out. This has become the Bitcoin show right now. Now, what do I mean by that? Well, we had the altcoin run, like this is Solana, incredible run from basically $20 to 68, 66, whatever it achieved up here. Since then, Bitcoin has shot up. We saw that chart. I mean, Bitcoin has literally gone boom like that. But notice Solana is struggling now below this previous high. Now, we'll have to see if it can break above it. But my guess, again, is that money is going to turn more towards Bitcoin. You'll see more money flow towards Bitcoin because the spot ETF is going to draw more interest from the public. And again, if Bitcoin continues to go up to 100,000, 200, I mean, yes, Solana probably does very well. In fact, it's one of my favorite cryptos over the longer term that I still think will survive. But you have to just recognize that the altcoins are stalling, and this is now the Bitcoin show for now, at least. All right, we're going to go into gold and silver. I want to touch on gold and silver real quick. All right, we have gold right here, guys. Again, gold, we know what happened with gold here. It went up, it blew right through on that light volume. I explained this yesterday really in detail about why it wicked up like that so much, well above the all-time highs, but then came crashing back in. I do want to show you that I do think that we're going to start to see some stabilization, and I do think gold starts to move back up. The better, more intriguing chart to me. So I'm just remaining bullish long gold. I mean, I did take a little bit of profit off. I took Newmont Mining off with members of InTheMoneyStocks.com. We made a nice score on that trade, and I'm glad I did because obviously it's had a little bit of a pullback since this move. But I'm still holding in the service GLD, GDX, and I still think those go considerably higher overall. But silver, I don't have much exposure directly to the silver commodity. And this chart's interesting, right? Because if we look at this, we have this channel, right? Channel here, and we have this area here. And obviously it's mirrored with this beautiful parallel channel. I mean, look at that parallel channel. Now, what I do know is that when you break out, it's a great thing, but there's a tendency for a retrace to the scene of the crime. The retrace would be right back here. So I guess what I'm saying to you is I may be interested in buying the SLV or silver at this retrace around $23.50 if it gets there. So if somehow we get silver to come back and retrace to this channel line, it broke out, it usually wants to come back and retest, that is going to be a very, very interesting level on the charts. All right, next up, we got to talk natural gas, guys. Natural gas, again, you guys know, I thought it would bounce already. It has not bounced, but like I said, there is some positives here. The positives is that number one, it's oversold, so that we know that. That doesn't necessarily dictate a bottom, by the way, but it's helpful. I mean, I'd much rather buy something that's oversold versus overbought. So it's oversold. Here's your 200 moving average in yellow. And then we also know that the 618 Fibonacci is right down here as well. So you're starting again to see a bid today on oil, on natural gas. It has this little green candle. In fact, let me flip over to the intraday chart. So look at this. This is the starting move on natural gas. I love that, but let's not forget that yesterday it also had a move up in yesterday's price action. In fact, let me just go back to the 10-minute chart to show this. So if we zoom out, right? So yesterday it was doing great and it gave it all back up. Today it's starting to do great, but can it hold its gains? That's going to be the key. You show me a strong buy volume day on natural gas where it holds its gains, and I think you got a bottom here. And I think it looks like it could go up significantly. But I need to see today that it can hold its gains versus yesterday where it gave up all its gains in the second half of the day and came right back in. The other thing to watch on natural gas is this pivot top. So here was your high yesterday. Do we go back up there? Because that's a short-term double top, but can we break through that level? If we can get there and break through that, that would be an additional bull signal for the bulls to jump on board. So two things you're looking for on natural gas today. One is, can it hold its gains? And by the way, holding its gains, I mean, if it closed right here, fine. It held its gains for the day. It didn't sell back off. Fine. Number two, if it continues up, can it take out the high from yesterday, which is on my chart around 277 on the chart of natural gas. All right, last chart I just want to go over, guys, is oil. You guys, I know I've been a bear on oil for a while here because the chart is telling me to. If we just zoom over here, I want to show you this, guys. Remember this trend line? First of all, there's your head and shoulders. Here's your trend line. And look, we've now broken this trend line, which was just it's a good trend line, but it's not at the completion of the head and shoulders just yet. So again, really what we're looking at here is, and I've said this target for a long, long time, guys. In fact, some of you guys may be sick of it, but hopefully you know it. Take that high, drop the plumb line down. You take the break point right here, drop that plumb line down. This is your target at about $68 a barrel. Now, it could pierce and go to 67 for all I know, but once it gets in the 68 to 67 area, I'm going to actually start to get interested in it. That would be the completion of the head and shoulders calculation. And again, it certainly looks like it's headed there. We're now only about $3 away on spot crude. All right, so listen, let's bring it back center here. Man, I got so many of these. I love this stuff now. Got lots of these different balls to play around with in this game plan. Before you know it, I'll get a hoop over here. You guys can actually see me shoot a couple hoops. But anyways, the ultimate goal here, folks, is just to keep you guys as informed as I can. And I do want to be clear, this is stage one, then we have a whole trading day, and then trading the close is going to be the next step. That's where when I'm on, I'm not always going to be on, but when I'm on, I'm going to wrap that up. I'm going to show you guys what happened from the game plan through the day and kind of tie the day. I want you guys to have something firm in the mornings and then something firm in the afternoon into the close so you feel informed, you understand. Not what the mainstream media is telling you. I want to give you the levels. I want to give you the lowdown. And again, guys, the comments continue to be unbelievably awesome. I continue to go through them. You guys have seen probably if you've left comments on YouTube that I've been liking them. As I like as many as I can. I don't get to all of them. I apologize. But just keep it up, man. It makes my day, seriously does, the kind words. So on that note, guys, I wish you all farewell. Till tomorrow, let's see what this market does. Right now, we're slightly higher. Does the market continue to go up on the jobs data that we just got? We have the non-farm payrolls on Friday. You have a great rest of your day.
Are you aware that someone could be watching you right now? Consider this. All of your data, your passwords, your entire identity could be exposed at this very moment. The best way to stop this is by using a VPN. NordVPN is more than just protection, it's peace of mind. Their threat protection blocks malware, trackers, and ads, keeping you safe from malicious downloads. Also, no more unwanted sales pitches or spam calls. Your privacy is non-negotiable. Please visit the link in the description and protect your future with NordVPN.